Hello and welcome to a quick review of the markets today. A very, very bad day. I want to call it says fully red. The Nifty down 2%, the small cap and micro cap also down 2%, and the mid cap was down 1.5%. You look at the sectoral performances, well, there was no sector in the green, but the funny part is that the best performing sectors, so to speak, were those which lost about a 1% each: metal, pharma, energy, right, consumer durables, and IT, right. These were the ones which the best performers, down between 1 to 1.5%. And what are the worst performers? Well, those which lost about 2.7%, like PSU banks, private banks 2.5%, FMCG 2.5%, oil and gas 2.2%, and auto 2.2%, and realty almost 2%. So just to summarize this was a broad-based sell-off. There was no one sector which was pulling the market down or any one sector which helped to pull a market up. The best performing was down just 1%, the worst performing was down 2.75%, and most of the indices were on the 2% level. So clearly a panic-driven sell-off. The reasons for this, well, most of you are aware that the market fell off from midday onwards. Small recovery at the end of the day, but the sell-off was geopolitical. What happened? Well, there was some attack on some civilian vessels by Iran, claimed by America. As a result of it, America attacked over 80 destinations in Iran as a counterattack. And Mr. Trump, who's attending the NATO conference in Ankara, Turkey, said that he's calling off the so-called ceasefire because he doesn't want to deal with these unprintable words people, right? So that was the thing which was a major trigger. But many of you may not be aware that there was a bigger trigger which started overnight and which was a tech-related sell-off. Because in Korea, Samsung reported very good numbers if you just read the numbers. But as you know, in AI, very good is not good enough. It has to be supremely good for it to be good. So the very good numbers reported by Samsung led to a massive sell-off in Korea. And in fact, the news was announced earlier, and hence even in the US and in Europe, there was a massive tech-related sell-off. So that started off the whole journey and led to this, red day, right? Because the impact of this is what? Directly felt by that one particular indicator, Brent crude, which was up 6% today on the back of being up even yesterday, right? So it was up 6% today to hit, so it's already almost in a week, it's down 8%. It's up 18%, 8%, right? To hit $78. So naturally, for India with 85% oil imports, it's a massive, massive negative from that point of view, right? So other thing, what? The VIX shot up 26% to about the 14 levels, if I remember right. It was at around, just give me, it's 14.68, right? And so now we come to the fact, I've talked about the cap curve, I've talked about the sectors, right? Who caused this sell-off? Where was the panic? And you'll be absolutely surprised to know. Fact number one, both FIs and DLIs were net buyers today. Shocking, isn't this? On a day when most sectors and the cap curves fell 2% each across the board, the end of the day figures showed DIs and FIIs as buyers. So what does this tell you? This tells you that this was a day of NIDI panic. The non-institutional domestic investors obviously panicked across the board when they heard these two news on the AI-related sell-off happening and the Korean markets reacting badly. They were down 6% intraday Korea, and the Trump-related tantrum back on track again, right? And so the advanced decline ratio, which is one clue to this, shows up dramatically because only 473 stocks were advanced today. 2,500 stocks, I think the worst advanced decline ratio in the near past that I can remember. 2,500 stocks down. So clearly broad-based, account panic selling. And today I won't call it profit booking. Today it was NIDI panic selling. It's not that the FIs and DIs did not change. They would have churned their portfolios. But what the net plus number is telling you is that they were smart about it. They did not rush to sell in the beginning. They waited for the prices to crash and then went and did their bargain hunting and picked up some stocks which they liked. So obviously the pharma and the IT in a sense being defensive from a crude related situation, were the ones which fell the least, right? So 98 basis points, I think pharma fell, and 130 basis points is what IT fell. So that lesser fall is what you can take comfort from this perspective. And of course, in the energy pack, because the oil producers gain when the Brent crude goes up, right? So very fascinating, because the pressure of all of this Brent crude was naturally seen in the rupee weakening by about 60 basis points today, the dollar index strengthening, US interest rates going up slightly. So all those are the effects of the Trump related actions. So that was there, but they were not the main causes and the triggers. So clearly then, to just summarize then and what, right? So the semiconductor wobble, South Korea's Kospi sell-off, and the flashpoint from Mr. Trump, and the subsequently what has he done other than the attacks? He has officially revoked all the oil export waivers that he had given to Iranian crude sales, right? So naturally you will see that today the aviation, paints, automobiles, public sector banks, those which are most sensitive to the oil price were the ones which bore the brunt, and the defensive like pharma and IT slightly bailed it out. But what we now for the markets for tomorrow and all of that, there will be, because today is severe correction, there will be some bargain hunting and some buying tomorrow, right? But overall, until oil prices stabilizes and any clarity emerges on the scale of the US-Iran military engagement, markets are likely to trade with a heavily defensive bias for the next day or so. So it's back to a war and market day, and hence the same strategy. Keep buying small amount on dips is what I would say till this clarity emerges. Thank you, and I look forward to my update tomorrow, and let's hope for a better day.